All right, crude oil's got a pretty nice little run going here the past 2 weeks. WTI in the high 70s instead of the low 70s. Phil Streible's with us, Chief Market Strategist at Blue Line Futures. Phil, great to have you back. Good to see you again.
Yeah, thanks for having me on, man.
Absolutely. Happy New Year to you. I think I haven't talked to you in 24. And yeah, we're still in January. I can get away with that. You want to talk some WTI? What do you think?
So, after dropping 11% in 2023, briefly dropping below $70 in mid-December, futures have risen about 7.5%. There's been several major drivers out there. Remember, this was one of the most hated and shorted futures contracts in 2023, and rightfully so. U.S. production was rising to record levels, but now that rate of change is starting to slow. There was no hope for the Chinese recovery and their economy. Remember, they're the second largest consumer of crude oil out there behind us. Now we're seeing $278 billion in stimulus, restrictions on shorting equities over there, and a 50 basis point cut to the reserve ratio. It sparks short covering. You should not only give love to that crude oil market, but also copper up 3% on the week. So that's just one part of it. You push over to the Middle East, which has been unhinged for months. Remember, the simple fact that Saudi Arabia cannot balance their budget without Brent crude below $80, they got to get it above $80. So they're going to drive it up there. So there's also been an OPEC plus put in place. So EIA stocks falling down 9 million this week.
Yeah.
We're running below that 5-year average as well. So there's a lot of different things. We haven't even gotten into driving season, interest rate cuts, the softer dollar, or the soft landing in the economy. I think that crude oil is intact at these levels.
Sounds like you might be a bull.
I am. I mean, bring it to the charts. We crossed the 200-day moving average here today. DMI plus crossed over DMI minus. Everyone should have that on their daily chart. Often it's a leading indicator for a breakout one direction or the other. And stochastics are rising back up. They're starting to push up into that overbought territory, but that doesn't mean it's overbought. That means that a bull market is starting.
Okay, what do you think is possible? What are the kind of next levels to watch here?
Psychological level of $80. We get crude oil back over $80. You're going to hear all the talking heads on TV that inflation's going back up, blah, blah, blah. He's disappointing us, and they're going to point the finger at somebody. So we got to go above there. We got to go where it's at,
yeah, where it starts making headlines. All right, what about all this U.S. production? You feel like that's been priced in at this point, understood?
100%, because the rate of change, when production was coming on, it's coming on at this accelerating rate. Prices are going to drop on that. Now, all of a sudden, it's like, hey, we're not producing as many barrels here, and we can't expand to produce more. Then the fact is that we've stalled out. So if you start to see a pickup in demand from the driving season and things like that, we're coming into that seasonal kind of period. Everyone, you're in Chicago, negative 15, 20 degrees. You ain't going anywhere. First day we're positive 20 degrees. You're driving all over the city. So, I think that seasonal demand is here.
All right, like that point. Okay, the natty gas trade, which has fallen apart. The copper trade, which has been iffy, but maybe getting a little shot of light from China. What about the rest of the commodity complex? Is what's good for crude good for the rest?
I think there's a lot of them out there. I mean, you look at things like gold, precious metals, it's a timing and the pace and the depth of interest rate cuts. The dollar index, dollar broke back out to the upside today. Really disappointed in there. Silver, diverging from the gold market. You see the gold-silver ratio dropping from 91 to 87. Remember, silver's an industrial metal. 54% of its demand is industrial demand. We not only see China, major consumer of silver, and then also you start to see mining production coming down. There's a lot of things that could really drive silver prices higher from here and tracking copper. There's a number of commodities. I mean, you got cocoa, it corrected today, down huge, but 46-year highs in cocoa, sugar prices pushing up. I mean, everything across the board's got a story. Throw up a live cattle chart, broke out to the upside. Got to be long that as well.
Love it. Hey, one that's not in that list, but I always like to chat with you on is BTC, the coin. How are you thinking about this post-ETFs?
It is the call option of the unknown. So that SEC approval marks a milestone. I think it's growing in demand. It's growing in popularity. There's obviously a limited supply. The ETF is another evolution in the crypto world. And the reality is that The reason why this thing is correcting, it's at 50,000. Okay, it gets hyped. You take some profits off there. But where do people have their cryptos? They got it in these Coinbase wallets, the Robinhoods, things like that. That's not going into a proper asset allocation strategy. That's just a thing that you're collecting and hodling and stuff. Now you have the reality of the ETF. You sell that overweight asset, which is not really a currency because it moves 10% a day. It trades more like a wild commodity. You sell that out, you raise cash, that drives prices lower. Now we closed out the gap, we're below 40,000. Now your financial advisor, your wealth advisor is going, hey, maybe we should allocate, 0.01% into some Bitcoin ETF, and we'll have a maximum weighting on this position and have it like a real position in a responsible trading account. It just hasn't gotten enough widespread of that. We're still in this kind of panic mode where people are liquidating and blah, blah, blah. But I think the days of Coinbase and holding actual crypto Bitcoin, I think those days are kind of limited at this point. The ETF is going to be where it's at.
Okay. All right, Phil, good to catch up. Thank you, sir.
You take care, bud.
Yeah, you got it. Phil Streible, Blue Line Futures. Nice chat on the commodity group. Let's bring in Renita Young for the latest on layoffs as we go to Paramount for the